Welcome back to our channel. In today's video, we're diving into an exciting trend that's reshaping the world of cryptocurrency: institutional money pouring into crypto in 2025. As more institutional investors jump into the space, the potential for growth and innovation is skyrocketing. In this video, we'll explore why major players are entering the crypto market, what it means for the future of digital assets, and why you should consider getting involved too. The rise of institutional investment in crypto. Institutional investors, including hedge funds, pension funds, insurance companies, and even central banks, have historically stayed away from the volatile world of cryptocurrencies. However, this is changing rapidly. In 2025, the trend of institutional investment in crypto is not only accelerating but is also expected to continue as companies look for new ways to diversify their portfolios and secure higher returns. Why are institutions investing in crypto? Institutional trust in blockchain technology. Blockchain, the backbone of cryptocurrencies, has proven to be a reliable and transparent technology. Many institutions are no longer viewing crypto as just a speculative investment, but as a legitimate asset class. With innovations in DeFi, decentralized finance, NFTs, non-fungible tokens, and tokenization of real-world assets, blockchain is seen as a game-changer for industries beyond finance, such as healthcare, real estate, and supply chain management. Hedge against inflation and currency debasement. As inflation concerns grow globally, traditional assets like stocks and bonds are being seen as less reliable. Many institutional investors are looking to Bitcoin and other cryptocurrencies as a hedge against inflation and currency devaluation. Cryptos like Bitcoin have a limited supply, making them a scarce resource. This scarcity increases their value over time, positioning them as a store of value similar to gold. The growth of crypto-based financial products. As the crypto market matures, new financial products like crypto ETFs, exchange-traded funds, futures contracts, and crypto derivatives are making it easier for institutional investors to gain exposure to the crypto market. These products provide a safer, more regulated way for institutions to enter the crypto space, reducing the risk typically associated with direct cryptocurrency investments. Institutional-grade custody solutions. Security has always been a major concern for institutions looking to invest in crypto. In 2025, institutional-grade custody solutions are emerging, offering safe storage options for large-scale crypto holdings. Major companies like Fidelity Digital Assets and Coinbase Custody are providing secure vaults and insurance policies, ensuring that institutional investors can safely manage their crypto assets. Regulatory clarity. One of the biggest barriers to institutional investment in crypto has been the lack of regulatory clarity. However, in 2025, governments and regulators are starting to create clearer frameworks for crypto assets, offering protection for both investors and consumers. As regulations become more defined, it will give institutional investors the confidence they need to enter the market. What does this mean for you? With institutional money flooding into the crypto market, there is tremendous potential for growth. As traditional finance meets decentralized finance, the opportunities are endless. Here's why you should consider jumping into the crypto space in 2025. 1. Growing market opportunities. As institutional investors pour billions into crypto, it will likely drive the price of major cryptocurrencies like Bitcoin and Ethereum higher. You don't want to miss out on this opportunity to invest early and benefit from long-term growth. 2. Access to new investment products. Thanks to the development of crypto ETFs, futures, and other innovative products, retail investors will have more ways than ever to get involved in crypto. This could provide you with safer, more regulated investment opportunities. 3. Diversification of your portfolio. Institutional investment in crypto brings more legitimacy and stability to the space, which means it could be a great way to diversify your portfolio. Adding a small percentage of crypto to your investment mix can provide significant upside potential with relatively low correlation to traditional markets. 4. Enhanced security. With improved custodial solutions and enhanced regulation, crypto is becoming safer and more secure for both retail and institutional investors. This means less risk of fraud and theft, making it a more attractive option for investors like you. How to get started with crypto investing. If you're ready to take advantage of the opportunities in the crypto space, do your research. Start by learning about the fundamentals of blockchain technology and the various cryptocurrencies available. Choose the right platform. Open an account with trusted and reputable forex and crypto exchanges. Look for platforms with strong security measures, customer support, and a wide range of assets. Start small. Don't put all your funds into crypto. Start with a small investment and gradually increase your exposure as you get more comfortable with the market. If you found this video helpful, like this video to show your support. Share it with friends and family who might be interested in learning about crypto investment. Subscribe to our channel and turn on notifications for more insightful videos on crypto and investing. Speech balloon, got questions or thoughts? Drop them in the comments below. We'd love to hear from you.
Here we go. I see the light inside you, brighter than the skies. Hold on, just let us escape and fly away tonight.